This hour brought to you by GCNLife.com. Live younger, look younger, feel younger at GCNLife.com.
The stocks discussed on Wall Street Raw are not in any way a recommendation or solicitation to buy, sell, or hold. If considering on acting on information, we first recommend you seek out a competent, licensed professional for advice.
What kingdom has sent you?
The kingdom of the Most High.
Nothing you have ever experienced can prepare you for the unbridled carnage you're about to witness. Super Bowl, the World Series, they don't know what pressure is. In this building, it's either kill or be killed. You make no friends in the pits and you take no prisoners. 1 minute, you're up $500,000 in soybeans, and the next, boom, your kids don't go to college and they've repossessed your Bentley. Are you with me?
The Genesis Communication Network is proud to bring you Wall Street Raw with nationally recognized market timer and previous Wall Street Week elf, Mark Leibovit, welcoming you on board his financial time machine. And here is the elf himself, Mark Leibovit.
Good morning, everyone. Good morning. It's Mark Leibovit. It's October 13th, Saturday morning, and welcome to Wall Street Raw. It wasn't exactly a profitable week for long-term investors as the Dow and S&P and NASDAQ plummeted late in the week, Wednesday, Thursday, bouncing back a little bit on Friday. Basically, we warned about this, and it's really common knowledge. I mean, the September-October time frame, often has big sell-offs. They call it a crash the last few days, but really wasn't. I mean, if you were in the market as I was back in 1987, and you saw a 20% decline in one day, which was, a couple thousand points today, if that happened today. Back then, I think it was 500 or 600 points. Then I think you're going to be talking about a crash. So, in today's market, I guess 20% it would probably be more like 4,000 or 5,000 points. I mean, that would be a crash. So, this is just a correction so far. Maybe it's the beginning of a bear market, and we don't know it yet. So the Dow hit support around 25,000, which was a support area, and the next big number is way down there around 21,000. So, I suppose, a bear market could have started, and we'll get further confirmation as the days and weeks unfold. But I'm more in the camp, as I told you, that we're looking at a typical September, October event. And it didn't happen in September. The statistics say that September is your worst month of the year. We know back in 1929 and 1987, the quote-unquote crashes occurred in the month of October. So, here we are. Of course, you got the election coming up in November. Everybody's nervous about that. We can talk about that in a second as well. Interest rates have been moving up for a while. They blamed interest rates the last few days in comments from Federal Reserve Chairman Powell in terms of his comments about, higher rates coming. But the rates have been creeping up for a while, so that really wasn't a surprise. So either there's something going on we don't know about, or just a typical cyclical event that happens this time of year. So I don't want to be Pollyannish about it. I mean, obviously, if we're entering a multi-year bear market after a 10-year bull market, we like to be defensive, and we have been here. We've been trading at vrtrader.com, trading mostly, believe it or not, the cannabis stocks, which have been doing really well for us. We were long some gold-related plays, some ETFs on our service, and made a little on that, though I'm not sure whether a big move is starting in gold or not. We were encouraged that it got above 1225, but so it's pulled back a little bit on Friday. But, we try to play what's moving. Natural gas we were playing, for example. So, some special situations, but, not in the indexes because I felt this time of year was a, treacherous time of year. So, that's sort of where we're at. You keep your powder dry. I don't know it's over yet. Maybe it's all over. We'll get some confirmation in the next few days because if you are hitting a crash bottom, you would hit it sometime in October. And one could argue that it came on Thursday and that was it. But, I need a little bit more confirmation than that. But that's pretty much the story. our good friend Don Violo will hopefully join us in a moment, and we'll get Don on the phone with a Canadian perspective. At the back up of those, for those of you who don't know who I am, and you're just catching me ranting and raving on this introduction, I'm Mark Leibovit, and I've been doing this for about 40 years, as is my current and next very special guest, Don Violo from EquityClock.com and TimingTheMarket.ca. Good morning, Don. Thank you for being with us.
Thanks for having me back, Mark.
Well, you can't say we didn't have some volatility this week. That's for sure, huh, Don?
Yeah, huge. On Wednesday and Thursday, the Dow combined dropped 1,300 points. Clearly, traders were concerned about Hurricane Michael, rising interest rates, trade negotiations with China. In fact, the Shanghai index dropped more than 5% on Thursday. That really was very, very scary. However, weakness has returned U.S. equities to intermediate oversold levels. The percentage of S&P 500 stocks trading above their 50-day moving average dropped to 11%. That's the lowest level we've seen since January of 2016. Historically, a drop to this level and a subsequent recovery has led to a significant stock market gain over the next 2 months.
Yeah, I was sort of referring to that in my early comments. There's no great surprise here. I mean, you and I have been around a long time. Even though September is historically the worst month of the year, we have seen crashes or mini crashes in October. So there's nothing that really surprises us here, Don. That's for sure.
Yeah, it happened again. Typically, October is a volatile month, and we certainly have seen that again. But also, October is a very important month because historically, right around the middle of October is a seasonal low for a move right through until about the first week in January. Now, we think we're just entering into that period of time when we start to see technical signs of a bottom here. The thing is, what do you do? And the question is, you look for sectors which perform best from late October until the end of the year. That's technology, materials, consumer discretionary, and industrial stocks.
And gold did bounce a little bit here the last couple of days, Don, finally, huh?
Yeah, it finally received a bid. In fact, a number of the ETFs completed nice little reverse head and shoulder patterns, and a number of gold stocks did pop, like Newmont, for example. Now, a word of caution, these historically gold and gold stocks have gone flat between now and about the middle of December, and then from the middle of December to the end of February, we go into another period of seasonal strength. So it's nice to see that little pop. Must admit, I'm not completely convinced we're going to get that much more in the short term.
And we had a little pop in cannabis stocks, too.
Yeah, it's amazing. I think with the markets going lower, you got a problem with cannabis stocks as well. But that didn't happen. They actually held up very, very well. But for a good reason. Next Wednesday in Canada is Smoking Day. That's the day when cannabis for recreational use becomes legal. And, of course, there's lots of anticipation of what that's going to do to cannabis stocks. Also, some pretty interesting news that came out this past week. It's a word from the Globe and Mail. They found out that apparently Altria, the largest tobacco company, has been in negotiations with Altria, and that's a possible equity interest in that particular play. So the cannabis play is not over yet.
Apparently not. Maybe I should pop up to Toronto next week, and we should take a puff together, Don. What do you think?
Sounds like a good plan to me.
Don Violo from EquityClock.com and TimingTheMarket.ca. I really appreciate you squeezing your comments in here on a busy Saturday morning. Thank you, Don, and have a great weekend. And it'll be exciting next week to see what happens with cannabis in Canada.
Yeah, thank you, Mark.
Always a pleasure having Don Violo on the phone. And if you do want to get more cyclical perspective, go to EquityClock.com and TimingTheMarket.ca, where you get some really great insight on cyclical patterns. Don't touch your dial. We'll be back after the break here on Wall Street Raw.
You're listening to Wall Street Raw with Mark Leibovit. Go to WallStreetRawRadio.com for information on Mark's newsletters and products. Stay tuned. Mark will be right back.
Most of you know that heart disease is the #1 silent killer in the U.S. What if I told you for just $54.95 a month you could fight against heart disease naturally? At Heart and Body Extract, we've been helping thousands of people get back to a healthier heart. Don't just take my word for it. Check out all of the success stories at hbextract.com, or to order, call 866-295-5305. That's 866-295-5305. hbextract.com. Don't risk it when you can take charge of it.
Advertising is simple. It starts with someone who has a need.
Mom!
And then gets more specific.
Mom, I want pizza.
Then we add urgency.
I want pizza tonight.
Before you know it, your GCN advertising message is reaching millions of listeners. Listeners who are definitely in need.
We want pizza!
You see, advertising on GCN is simple. Your message meets their need, and the result means new business for you. Tell us about your business. Then let our super creative department go to work to craft just the right message to feed those who have an urgent need.
We want pizza tonight!
GCN has the most affordable national radio advertising rates, period. And millions of people listen to GCN radio programs on over 1,000 AM and FM and XM stations and streaming audio live. Get started today with GCN, the Genesis Communications Network. Just shoot us an email, advertise@gcnlive.com.
When you use public Wi-Fi, hackers and identity thieves can see anything you do online. Embarrassing photos, your web history, even your passwords. That's why I use private internet access to encrypt my internet connection for less than 10 cents a day. Sign up now at privateinternetaccess.com, and in just a few minutes, you'll be browsing anonymously and only sharing what you want to share. privateinternetaccess.com. It's time to protect your online privacy.
In these uncertain times, it makes sense to have a sustainable backup method to cook food and boil water. If your current plan includes using a fuel-burning stove or cooking over an open fire, then there's a much better way. The Minuteman Rocket Stove is a biomass-burning cooking stove that only requires small quantities of sticks and twigs for fuel. The Minuteman Stove is easy to use, smokeless, portable, powerful, and sustainable. For the finest in survival cooking stoves and fire starters made right here in the USA, go to MinutemanStove.com. That's MinutemanStove.com.
Hello, I'm Mike Lindell, the inventor of MyPillow, and like all of you out there, I had problems sleeping. Pillows would go flat, I would flip-flop all night long, I would wake up with a sore neck, maybe a headache, or feel like I needed a nap even though I slept 8 hours. When I invented MyPillow, I wanted it to where you could move the patented fill to give you the exact support you need as an individual, regardless of sleep position. MyPillow will get you into that deep REM sleep faster, and you will stay there longer. It's not about how much time we spend in bed, it's about how much of that quality sleep we get. I do all of my own manufacturing right here in the United States. I have a 10-year warranty. You can wash and dry my pillow, and I give you a 60-day money-back guarantee, so you have nothing to lose. And here's my best offer ever. You can buy one of my pillows and get one absolutely free.
Go to mypillow.com or call 800-870-0305 and use promo code GCN. That's mypillow.com or 800-870-0305 with promo code GCN.
Hunters, anglers, campers, and survivalists. Get back to nature. Expand your horizons with the highest quality, most versatile, unique slingshots and sling bows on the market at slingbow.com. Sling bow products are compact and models start from just $17.98. They're perfect for your bug-out bag or storing in your vehicle. Give yourself and your loved ones the excitement and tradition of sling bow. A new frontier in archery and truly modern twist on this primitive survival tool. Feel the thrill only at slingbow.com.
Think positive. Never show any sign of weakness. Always go for the throat. Buy low, sell high. Fear, that's the other guy's problem.
Welcome back to the Wall Street Raw Radio Show with Mark Leibovit, your time machine for the financial markets. Want to know more? Go to wallstreetrawradio.com. Now, here's the elf himself, Mark Leibovit.
Welcome back to Wall Street Raw. This Saturday, October 13th. As you know, it was one of those volatile weeks in the market, a little recovery attempt on Friday, and as you heard both of my comments and that with Don Violo from EquityClock.com, no great surprises here. And, it would make sense that with the apprehension over higher rates and the China discord, whether we're going to prevail over China with the tariffs and with the elections in early November, the market would be a bit nervous this time of year. Of course, there could be things that we don't know about, as I mentioned earlier, but that's always the case with the markets. We don't always find out at the moment, and we find out later why the market reacted, the way it did. But I must point out, though my political bents are not on the Democratic side, as you probably know, listening to the show for the last several years, markets do go up during Democratic administration. And we saw the market recover under Obama, even though, again, he's not my favorite president for many reasons. But the market did go up. In fact, I know some investor friends who were happy that Obama was in because they said the market did well. Well, it did well under Trump as well. So, you can argue both ways. But, under Republican administrations, Herbert Hoover in 1929, Ronald Reagan in 1987, we did experience market crashes. So the market does what it wants to do. And whether it's pure manipulation or just cyclical patterns or both, you see boom and bear markets under both political parties, though my preference is not a Democratic administration for a lot of reasons, including higher taxes and apparently the lack of respect for the rule of law, particularly when you hear Hillary Clinton come out in recent days about encouraging violence on the part of demonstrators. That is certainly not the kind of country we want to see. But speaking strictly in terms of the markets, the market can do what it wants no matter who's sitting in the White House or running Congress. So just something, to keep in the back of your mind. That's why you try to follow the markets technically. We use contrary opinion. We use cyclical indicators. And as I've often mentioned on the show, I consider myself somewhat of a survivor. I mean, having done this for many, many years, starting on the Chicago Board Options Exchange way back in the 1970s and running a research department at a couple of brokerage firms and doing a lot of interesting things over the years, including publishing my financial reports and trading. So, the fact we're still here, we're still doing it. We may never catch the exact bottom or the exact top. There's always a trade somewhere, an opportunity somewhere in the markets. And for those who've been real long-term in the market, almost brain dead on a certain level, if you just sit long the Dow Industrials or the S&P and you don't pay much attention to the volatility, though personally it's tough for me to see the market drop 30-40% when I think it can go down. Many of those who have held stocks all these years, particularly dividend-related stocks, have done well. And markets have come back. So if you got that 30-year, 40-year perspective, or you're investing for your kids and you start early, the volatility of the market is always there, but the trend apparently always seems to move higher, and that's because we're always experiencing inflation. So until something really changes, the Federal Reserve has been in there since 1913, as you know, and though the dollar has lost 97% of its value over the past 100-plus years, the pumping of money into the system and credit have driven equities higher and real estate higher as well. So investments across the board. So then, in a sense, long-term is a place to be. We tend to be more trading-oriented, shorter-term oriented, and part of that reason is we're looking for opportunities. And one of those opportunities, Don and I talked about it briefly at the end of segment 2, of course, was the cannabis stocks. And I launched my Cannabis Vice newsletter back in 2014. We were one of the early ones in there. Not the first, but we were in there. And names like Canopy Growth, which is now trading around $50 a share. We saw and had in our newsletter $2 a share. There's been a big move here. And you've got the opening up of Canada next week, the recreational law changing. But a lot of the moves in the stocks may have discounted a lot of this move already. In other words, I'm not bearish on them at all. I think big picture, there's still a lot to come, but you're going to have to be selective. Certain are going to do better than others. And then, of course, we're in this time of year where there's volatility. But, there's always an expression that we like to refer to, and I'm sure you've heard it many times, is you buy the rumor and you sell the news. So the fact that, the cannabis stocks are moving up, not only because of the Canadian legalization, but that's been a big story here in the last year or so. But because of that, many of them have, apparently peaked out. Not every name, but, Telray, TLRY, which went public around $22 a share in August and traded up to $300, and now it's back to just over $100 a share. Canopy Growth, which is the premier name up there, surged, as I mentioned, from $2 all the way up to the mid-50s, now trading around 50. There's some reason to believe that, a lot of the move may already be behind us here, at least for the short term. Maybe they have to catch their breath for a while. But with the story next week, there's still a chance that you'll see more of a pop over the next couple of days, but not necessarily to new highs in those stocks. A lot of opportunity on a trading basis, however. They tend to be very volatile. And, of course, now we have some really interesting stories. So we referred to that a few moments ago with Don. Of course, this past week there was a story in the Globe and Mail that Philip Morris is possibly or is in discussions with FRIA. That's APHQF on the NASDAQ. We trade it ourselves, and it's in our newsletter. And stock's a little bit behind, frankly. The high was around $20, and it's well off that level. At this time, or around the 15 level, so still has some theoretical room to the upside. But the big story that a company like MO, which is Altria, finally getting into the space. And I've mentioned this many times. If you'd asked me, I'm sure those of you out there that heard me talk about how I felt that tobacco companies were going to be getting into the cannabis business, and it just didn't happen. It just didn't happen. But it turned out it was the liquor companies like Constellation Brands or Molson Coors, for example. They decided to jump in, and now we're finally seeing some story that Philip Morris, who has more money than God, who could probably take out the entire cannabis industry if they chose to do so, is finally taking some interest. And, of course, the interest would be in Canada, but, they have worldwide distribution, particularly with their affiliated company, Philip Morris International, which is a separate stock, ticker symbol PM. So, a lot of things could happen internationally. And when the U.S. finally does open up, which it will, at some point here, and there was a lot of push for it, particularly when you hear names like John Boehner, former Speaker of the House, on the board of a cannabis company, that is coming here in the U.S. So a company like Philip Morris, MO, would participate and could participate very handsomely with that sector. So a lot of big names out there with big checkbooks looking to get into the space. Hopefully we can continue to participate and talk about them at our VR Cannabis Vice Letter. Don't touch your dial. We're going to be back after the break with our good friend Sinclair No from KFNN 1510 Phoenix. We always try to have Sinclair on our program here with a lot of astute comments regarding both the Federal Reserve and our famous Eat the Bankers column. We'll talk to you after the break.
Go to WallStreetRawRadio.com for more information on Mark's newsletters and products. Stay tuned. Mark will be right back.
High-performance investors and traders use superior financial tools to achieve superior returns. You have that tool with Mark Leibovit, nationally renowned top market timer, legendary television Wall Street Week elf, and nightly business report market monitor, who shares with you his unique market tools and commentary at WallStreetRaw.com. Here, Mark provides you with his latest ideas on how to help build and protect your wealth and help you avoid the next big market tsunami. Mark has a special free gift for listeners of his Wall Street Raw radio show. Go to WallStreetRaw.com and sign up for his free monthly Cannabis Vice News Raw report. While there, go ahead and sign up for his free monthly Gold News Raw report. Both are totally free. No credit card information is required, and no one will call. Sign up today for your free Cannabis Vice News Raw report and Gold News Raw report at WallStreetRaw.com.
Policies issued by American General Life Insurance Company, Houston, Texas. Not available in all states. For details, visit AIGdirect.com.
Do you have a family? Would you like to help make sure they'll be taken care of if anything were to happen to you? If you answered yes, you probably need life insurance. Now, do you think life insurance is expensive? If you answered yes to that too, you definitely need to give AIG Direct a call. We could find you a $250,000 policy for just $14 a month, which means you could save hundreds of dollars a year. Call us now for a free, no-obligation quote. 1-800-919-5435. Since 1995, we've helped millions of people find out if they could save up to 70% on their term life insurance. See how affordably we can help you protect your family. Call AIG Direct now for your free quote. 1-800-919-5435. You could save up to 70%. That's 1-800-919-5435. 1-800-919-5435.
Have you checked your Google search results lately? Search results are usually the first impression that people form of you or your business, so make sure that they create a positive impression with ReputationDefender.com. What the Internet says about you can have a big impact on your life and your livelihood, even if it's not true. Fortunately, you can now control how you look online and in online search results with ReputationDefender.com. Call 800-831-0771 now. That's 800-831-0771 for your free reputation analysis. If you have negative material from an ex-employee, upset patient, or former client, newspaper article, legal issue, social media, or other source showing up in your search results, you can combat it with ReputationDefender.com. Our dedicated experts in patented technology can help make your online search results look their best. Call 800-831-0771 to learn more. 800-831-0771. That's 800-831-0771. Or visit ReputationDefender.com.
Bags under the eyes, crow's feet, fine lines and wrinkles are things adults complain about as they age. Now there's Instantly Ageless. It works in minutes and is great for men and women.
I've probably noticed in the past 5 years that my eyes have gained a lot of fine lines, wrinkles, my crow's feet have gotten deeper. Wow. I was hoping for 5 years, but that's like what my eyes looked like 10 years ago.
That is really cool. Wrinkle gone. It's easy. You just put it on your finger and go. Now I wish I had more down here because I can still see one wrinkle. It's bugging me.
I am a little bit emotional. I'm turning 40. I didn't think would be a big deal to me, but that looks like the me that I feel like inside instead of what I see when I look in the mirror.
Try Instantly Ageless today at GCNLife.com. That's GCNLife.com. 30-day money-back guarantee and preferred price discount at GCNLife.com. That's GCNLife.com.
Welcome back to Wall Street Raw. Want to know more about Wall Street Raw and the Leibovit VR newsletters? Go to wallstreetrawradio.com.
Welcome back to Wall Street Raw. It is Saturday, October 13th, and we have our good friend Sinclair No from KFNN 1510 Phoenix and author of the incomparable blog EatTheBankers.com on the line with us. Good morning, Sinclair.
Morning, Mark. Good to be with you.
It's that time again. So let's talk about the consulting group, CG42, Sinclair. They published a report about customers being fed up. I believe you and I are fed up, too, but it's interesting to read this story this week.
Customers are fed up with Wells Fargo. I can't imagine why. Could it be... Could it be that they're tired of dishonest, unethical, illegal practices? It turns out, yeah, that's actually a big complaint among customers of the bank. You know you got a problem when your bank is dishonest, unethical, and conducts illegal practices. And that's what a lot of people are saying about it. And they're also saying that they're thinking about leaving the bank. They're thinking about taking their deposits and going elsewhere. And that could be a big problem for them. About 30% of Wells Fargo's customers at risk of dumping the bank. Now, not that many will actually do it, but they think that Wells Fargo could lose up to $93 billion in deposits over the next year. It just kind of makes sense. Fraudulent accounts, charging for things you didn't provide. you don't have to be a PhD to understand that if you or I did this, we would be in jail.
Forever.
For a very long time, anyway.
Well,
much longer than I would like.
The Fed held back the Wells Fargo from growing, too. And that plus this story, could we possibly be looking at the demise of this bank?
It's far too soon to say that. Look, Wells Fargo has been around for a long, long time. They're a very big bank. They've got a lot of money. They still have a lot of money on deposit. If they can turn things around, if they can convincingly turn things around, yeah, sure, they can survive. But right now, it looks like as a long, slow decline. They're going to have to do a lot more than they've done already, because what they've done already has not worked, and people just aren't buying it.
Well, elsewhere, some of the other banks out there started to. We're expecting earnings reports, aren't we, from the other banks?
Oh yeah, Friday was a big day for earnings reports, and we got it from J.P. Morgan Chase, over $8 billion in profit for the quarter. They're making money hand over fist. Citigroup shares were up on Friday after they reported a significant increase as well. One of the big things that they had was a tax rate that dropped some 24% in the third quarter. So that was a big boost to their profitability. That plus net interest margin clocked in at 2.7%. So higher interest rates have been a positive for the banks, because basically that means they get paid the higher interest rate. They don't pay their customers the higher interest rate. There's a lag between that happening and a spread between what they receive and what they pay. And so that should mean more profitability. Now, typically, as you see higher rates as well, you see a little bit of a slowdown in mortgage lending and perhaps in some other lending areas as well. Mortgage lending would be the big one that comes to mind first off. So it's not just a pure profit situation for the banks, although the banks are looking, pretty doggone profitable, quite frankly. They're not really growing their revenue, but they are continuing to grow their profits.
Well, Sinclair, this week we didn't touch on it, but I guess all our listeners are anxiously awaiting our comments regarding the small amount of volatility we saw in the market this past week. No great surprise to me or you. We've been around a long time. Generally, September, October, we often see some volatility, though history says September is the worst month. You and I know many crashes have occurred in October. I know you titled a couple of your reports "Crash" this week, so let's talk about that.
I think we did have a crash this week. Come on. Wednesday was an 800-point day, followed by a 500 and change day on Thursday. Look, an 800-point day is a crash. At least it is in my book. Think about this. When did we last see an 831-point decline? That was a bigger point decline than the crash of 87. Sure, the crash of 87 was somewhere in the neighborhood of, I think it was like 22% drop. We're nowhere near that. We were about a little over 3% on Wednesday. I get it. There's a difference. But still, an 800-point decline, that's serious. And we had a 4% drop the same day in the NASDAQ. This is some serious stuff. It's moved us into correction territory. It broke through some very important technical areas. You're looking at the 50-day moving averages on several of these major indices. That was violated. We're going back to some areas that we haven't seen, in some cases maybe back to April or something like that, depending upon which index you're looking at. We had a serious breakdown in the market taking place this past week. Now, what does that really tell us about what's going to happen next week? Well, you could look at it and say, for example, Friday morning, you could anticipate a bounce. And I talked about that on Thursday. I said, look for a bounce on Friday morning. After Friday morning, though, what happens? Well, it kind of fades away. What's going to happen next week? I'm not sure yet. We're seeing some serious volatility, some serious breakdown in the markets right now, and I think it's just a warm-up. I think things are going to be a little bit nasty. You add this to what we saw back in the spring. We now
remember in February, early February, the market took a big nosedive. I saw that the Dow was down 1,500 points or 1,800 points at one point. I think it was February 3rd or 4th. So we got to get used to this, I guess.
Well, I think so. I think that the days of low volatility from 2017, I think those days are gone. We are in a much higher volatility period now. And I think that would tell us that we are near the end of the cycle in this bull market. Now, exactly when does this bull market end? I don't know. Could this just be a garden variety correction? Absolutely, it could be. I mean, we think back to 87, even in 87 when the market turned down 22%. I'll draw the comparison as we continue.
Sinclair, we'll pick up right after the break. We have a lot more to talk about with what happened that past week. Sinclair No from KFNN 1510 and author of the great blog, EatTheBankers.com. Don't touch your dial here on Wall Street Raw.
Are listening to Wall Street Raw with Mark Leibovit. Go to wallstreetrawradio.com for information on Mark's newsletters and products. Stay tuned. Mark will be right back.
High-performance investors and traders use superior financial tools to achieve superior returns. You have that tool with Mark Leibovit, nationally renowned top market timer, legendary television Wall Street Week elf, and nightly business report market monitor, who shares with you his unique market tools and commentary at wallstreetraw.com. At wallstreetraw.com, Mark provides you with his latest ideas on how to help build and protect your wealth and help you avoid the next big market crash. Mark has a special free gift for listeners of his Wall Street Raw radio show. Go to wallstreetraw.com and sign up for his free monthly Cannabis Vice News Raw report. While there, go ahead and sign up for his free monthly Gold News Raw report. Both are totally free. No credit card information is required. Sign up today for your free Cannabis Vice News Raw and Gold News Raw reports at wallstreetraw.com. That's wallstreetraw.com.
Folks, this is very important information. What's to be said about CBD? AncientLifeOil.com. Our CBD is made from hemp and has 0.003 THC, which means this wonderful product won't get you high, no matter what amount you take. What does CBD do for the body? My hands are tied. But you can Google CBD benefits and be astounded. When you're finished reading, you'll want to log on to AncientLifeOil.com. That's AncientLifeOil.com. And purchase. Life is good when you feel good. People are tired of pain. People are asking for non-GMO organic products to help them with, you fill in the blank. Legal in 49 states, and again, our CBD is made from hemp. Ancient Life Oil is about helping people, one by one by one. If you wonder how good the product is, the CEO takes it every day without miss. AncientLifeOil.com. That's AncientLifeOil.com. Have a great day.
Are you afraid to go to the mailbox because of letter after letter from the IRS? Are they stacking on more and more penalties and interest? By now, you know the problem won't go away on its own. Don't let the IRS chase you to your grave with penalties and interest and liens and levies. You need real help now. I'm Dan Pilla. I wrote the book on tax debt settlement, and I help thousands of people solve tax problems they thought couldn't be solved. I can help you too. Call 800-34-NO-TAX or go to my website, danpilla.com. That's danpilla.com. danpilla.com.
Hey everyone, Proactive MD has an incredible offer for our radio listeners only. Stay tuned for our exclusive offer that includes a free charcoal pore cleansing brush and free shipping. Proactive MD with prescription strength adapalene can heal and prevent future breakouts. Today, for just $19.95, we're offering listeners the 3-piece Proactive MD system with free shipping, plus a free gift, the new charcoal pore cleansing brush. Get this exclusive offer by calling now, 1-800-583-8662, or go to proactive.com and enter promo code RADIO. You heard right. Proactive MD plus free shipping and a free gift. The new charcoal pore cleansing brush. You'll get all this for just $19.95 and their 60-day money-back guarantee. You're guaranteed to get clear and stay clear, or you get your money back. Call now. 1-800-583-8662. That's 1-800-583-8662. Or go to proactive.com and enter promo code RADIO. Again, go to proactive.com and enter promo code RADIO.
This is Fred.
Hi, I'm Fred.
Fred's a repeater.
I tend to repeat.
Fred has a business.
I do have a business.
And a problem. Fred repeats the same tired advertising over and over, and now it doesn't work.
Over and over.
But Fred is about to see a vision.
I'm seeing a vision.
Advertising on the Genesis Communications Network is the smart way for Fred to reach his potential customers with the most affordable national advertising rates, period. Get started today with GCN, the Genesis Communications Network. Just email advertise@gcnlive.com.
Responsibility begins and ends with our partners and our shareholders, and that's it.
There is no freedom without the law.
Get it? Got it? Good.
Welcome back to Wall Street Raw and the final segment with Mark Leibovit. Now, here's the elf himself.
Welcome back to Wall Street Raw on this Saturday, October 13th, and we're talking to our good friend Sinclair No from KFNN 1510 AM Phoenix and author of the great blog, EatTheBankers.com. Thank you for staying with us this morning, Sinclair.
Well, this is the place to be, isn't it?
We always hope so.
It is in my book.
Who do we point fingers at, if anyone, regarding this correction? There's been talk about, of course, interest rates moving up, the elections coming up in early November, China. How do you read it? If sometimes we always look for an excuse with the markets, but we know sometimes we see it technically. And prefacing your comments, we saw the Russell 2000 and the mid-cap index top out in September. And if you look at those charts, we've been going down. NASDAQ topped out before this past week. So technically the market was telling us look out for a pullback anyway, whether it was related to interest rates or the election or China. Well, what do you think?
Yeah, it's related to interest rates, the election, China, all those things. Yeah, exactly. Which one? Take your pick. Blame whoever you want to blame. This past week, we saw Trump blaming the Federal Reserve.
That was interesting, yeah.
Called Jerome Powell wild and loco. And it's like, yeah, you could say a lot of things about Jerome Powell if you wanted to. Wild and loco would not be the adjectives that I would use. Boring, dull would be, he's the poster child for gray flannel. Come on.
Well,
I get you consider Washington try to be exciting.
Giving us some color in the commentary, that's for sure. That's okay.
So, but there is a point there. The Federal Reserve is tightening. That means that they're tapping the brakes. And I mean, this is a little bit different than back in the Greenspan days when he used to, push the accelerator to the floor and then slam on the brakes. This is a very, very gradual tightening from the Federal Reserve, getting us away from the emergency low interest rates that we've seen for the past right at 10 years now, and getting us back to more normal. I think it's the beginning of the end of the bull market, in part because this bull market has been going on for very long, and even though bull markets don't die of old age, they don't last forever either. there is a natural cycle that takes place. Part of that natural cycle is the Federal Reserve starts to raise interest rates. Money starts to get tighter. Investment starts to fall off as money gets tighter. We start to reevaluate our pricing as money gets more expensive. That means that we have to look at PE ratios and reevaluate and say what's overvalued here, what isn't, because we know that the earnings are going to go down as money becomes more expensive. So we look at all of these things, and you see that people are spending less, consuming less because money is more expensive. That's what happens. That's how the Federal Reserve maintains a little bit of price stability, but they've never been able to do that without pushing us over into a recession. I think that's a good chance of what we'll see. When does it hit? Good question, because we've seen this happen before, and we've seen these kind of pullbacks. I was mentioning 87, the crash of 87. Markets went down 22% at the time, but they recovered very quickly, as you recall. It was only about a month or so before we had recovered from that, and then it was about 3 years, nearly 3 years, before we moved into a recession following the crash of 87. So this is not necessarily the immediate precursor to a recession, but it's telling us that the economy is getting a little bit wobbly here and warning us that, look, you need to make your plans in a bull market for what will happen in a bear market. You don't wait until a bear market comes before you figure out what you're going to do. You make your plans, you get your plan in place during a bull market, and then you're prepared to weather the bear when it comes without damage, or maybe even making some profits along the way. That's what a smart investor would look to do. And I think that we're getting signs from the market now saying, watch out, things are tough. I think we're going to see some really difficult times within the next 12 months. I don't think that this goes too much further, this current pullback. It could, but I think we're going to see a little bit of recovery. We're going to see people jumping in, looking for some bargains here. It may not be the wisest move, but that's been the MO for traders for quite some time now. Meanwhile, this past week we did some technical damage. If we break down from here in the coming week, it could get real rough real fast.
I know we hit support around 25,000 the way I look at it, and we bounced right off that on Friday. And the next big number, at least in my work, Sinclair, is well down there at 21,000 if it really, starts to fall apart. So not to say it's going to do it, but that's what the charts open up as potential. So we'll have to wait and see.
Yeah, that sounds pretty good to me. That's nice analysis there. And I would say over on the S&P 500, we're looking at maybe lows back to the April area of around 2580. That would be an area that we could conceivably go down to if we can't hold during the coming week. Any break below 2580, and it's really, really nasty. But down to that point, that would be a strong level of support, I would think.
I think the markets are going to wait for the election. What do you think?
Yeah, that's what I think, too. Wait till the election, see what happens. Maybe throw a tantrum, and it doesn't really matter which way the elections turn. Markets will probably throw a tantrum right around the time of the election. And then they'll try to sort things out and figure out where we go from here. But, this kind of volatility does some serious damage. We're in a real risk-off mode. Not really signs of panic, though. But we actually saw gold jump up about $29 on Thursday. Gold has been just lifeless for a long time now. Just meandering along, drifting a little bit lower, then all of a sudden, boom, 29 points. We saw the VIX, the volatility index, on Wednesday. I think it was like about a 47% jump in the volatility index. This was enough to catch people's attention. I think that's absolutely the case. and enough to send people back to gold, that's the ultimate safe haven play. Now, I don't know, you're the ultimate timer on gold. Probably, I don't know if people realize this, but you are probably one of the absolute best timers in the gold market that we've seen in generations. So I don't know where it goes from here, but I thought it was an interesting move that we saw gold pop like we did.
Yeah, we got above that 1225 temporarily, which was a resistance level. Your next big number is 1275. So I'll take it a day at a time here, but no question it's been way underperforming, as you know, for the past few years. So, Claire, we only have about 30 seconds. Just a quick comment here. You know, whether Democrats prevail in November or not, we see bull markets and bear markets no matter who's in the White House. So that's really something we need to remember.
Yeah, we absolutely do. You look, when you get right down to it, is there that much difference between the parties? Nah, come on. You know, you can come up with one word to describe all politicians, I'm sure.
And it's not a good one.
I'm not going to say it on air, but you know what it is.
Sinclair No from KFN and 1510 Phoenix, and author of the incomparable blog, EatTheBankers.com. We always have fun doing this, and don't forget to go to EatTheBankers.com if you can. Great commentary there. Sinclair, thanks for joining us. We'll speak to you next week.
Thank you, Mark.
And as we do each week, folks, we close our show with what our old friend Ed Hart used to say way back in the 1980s, 1990s, and he closed his show as we do, as we say, we will know in the fullness of time.
Thank you for listening to Wall Street Raw with nationally recognized market timer and previous Wall Street Week Elf, Mark Leibovit. If you missed any of today's show or to get in touch with Mark, please go to wallstreetrawradio.com. Any stocks or investment discussed on Wall Street Raw are not in any way a recommendation or solicitation to buy, sell, or hold. We first recommend you seek out a licensed financial professional for advice. Go to wallstreetrawradio.com for more information on Mark's newsletters and products.
High-performance investors and traders use superior financial tools to achieve superior returns. You have that tool with Mark Leibovit, nationally renowned top market timer, legendary television Wall Street Week elf, and nightly business report market monitor, who shares with you his unique market tools and commentary at wallstreetraw.com. Here, Mark provides you with his latest ideas on how to help build and protect your wealth and help you avoid the next big market tsunami. Mark has a special free gift for listeners of his Wall Street Raw radio show. Go to wallstreetraw.com and sign up for his free monthly Cannabis Vice News Raw report. While there, go ahead and sign up for his free monthly Gold News Raw report. Both are totally free. No credit card information is required, and no one will call. Sign up today for your free Cannabis Vice News Raw report and Gold News Raw report at wallstreetraw.com.
Looking for that edge during those intimate moments? We see many ads for enhancement, but the side effects include death. At GCN Team, we should change the Healthy Body, Brain, and Heart Pack to the Healthy Libido Pack. The brain and heart are not the only organs that require a healthy vascular system. For proper blood flow at the right moment, go to GCNteam.com or call 877-878-4203. That's 877-878-4203. That's 877-878-4203.
It's a no-brainer. A Big Berkey water filter is the one you need, period. You need a water filter that removes chlorine, fluoride, pharmaceuticals, BPA, and other endocrine disruptors, pesticides, bacteria, viruses, and much more, right? And does it all at only 2 cents per gallon. Get the original and most trusted name in gravity water filtration, Big Berkey. And now GCN listeners receive 5% off ceramic filter systems using code GCN. Call or click 1-877-99-BERKEY or BigBerkeyWaterFilters.com. That's 1-877-99-BERKEY.